We live in a world that is addicted to noise. Everywhere you look, someone is shouting about the next crypto spike, the secret stock pick that will double overnight, or the hustle that will make you a millionaire by next Tuesday. It is exhausting, and frankly, it is mostly a lie. Real wealth, the kind that gives you freedom, stability, and options, doesn't scream. It whispers. It doesn't happen in a single explosive moment. It happens in the quiet moments when nobody is watching. If you are tired of the hype and just want a strategy that actually works for real adults, you are in the right place. Welcome to Trip to Wealth. If you haven't yet, please click that subscribe button so we can rebuild your financial life together without the stress. Today, we are walking through the 7 silent habits that build wealth while you sleep. These aren't shortcuts. They are the boring, effective truths that the wealthy use to separate themselves from the crowd. The first silent habit is understanding that time is not just a calendar, it is a multiplier. Most people look at investing as a linear process. You put $1 in, you get $1 and some change back. But the wealthy understand that money has a physics of its own. It grows in layers, like a snowball rolling down a hill. In the beginning, the process feels painfully slow. This is why so many people dismiss it. You might invest diligently for 3 or 4 years and look at your account balance only to feel disappointed. It barely seems to have moved. You think, is this it? Is this what all the fuss is about? This is the dangerous phase where most adults give up. They assume the math is broken. But the habit you must build here is looking past the immediate result. The first decade of investing is not about getting rich. It is about building the foundation. The money you invest in your 20s or 30s isn't just money. It is a seed that will do the heavy lifting for you in your 50s and 60s. The wealthy respect the first decade because they know that the dollars invested early are the hardest workers they will ever hire. They don't wait for the perfect time to start. They start messy, they start small, and they let time do the heavy lifting while they sleep. But starting is only half the battle. Once you begin, you need a mechanism to keep you going when motivation fades, which brings us to the second habit. We like to think that we are rational, disciplined creatures who will always make the right choice. But the truth is, willpower is a battery, and by the end of a long work week, that battery is empty. If your wealth-building strategy relies on you making a conscious decision to save money every single month, you will eventually fail. Life gets in the way. The car breaks down, the holidays arrive, or you just forget. The second silent habit is the removal of choice. The wealthy do not rely on discipline. They rely on systems. They automate the process so that their wealth builds in the background, completely independent of how they are feeling that day. This is the difference between an amateur and a pro. An amateur saves what is left over after spending. A pro spends what is left over after automatically saving. By setting up automatic transfers the day your paycheck hits, you are paying your future self first. You are making the decision to be wealthy one time and then letting the system execute that decision forever. This creates a rhythm. It stops being an emotional struggle and starts being a silent background process. You stop looking at the market. You stop worrying about the news. You simply let the machine run. The most powerful financial move you can make is to take your own human error out of the equation entirely. However, simply putting money into the system isn't enough. You have to know what to do with the growth that system generates. Here is where the engine really starts to roar, and where the silent part of wealth building becomes critical. When your investments start generating returns, dividends, interest, or capital gains, you will face a temptation. It is the temptation to treat that money as free cash. You might think, great, I made $500 in dividends this quarter. I can use that for a weekend trip. The third habit is the relentless commitment to the reinvestment loop. The wealthy understand that the fruit of the tree contains the seeds for the next forest. If you eat the fruit, the process stops. If you plant the seeds, the process accelerates. Every dollar of profit you reinvest becomes a new employee working for you. It joins the original principal and starts earning its own returns. This creates a compounding loop where your money is making money and then that new money is making more money. It is a silent explosion of value. Over time, this loop becomes more powerful than your monthly contributions. Eventually, the returns from your investments will exceed the salary from your job. That is the tipping point of financial freedom. But you only get there if you keep your hands off the returns in the early years. I want to pause here and ask you a question. Go to the comments section below and tell me, which is harder for you, finding the money to start investing or resisting the urge to spend the profits once you have them? I read every comment, and I'm curious where your struggle lies. Once you have locked in your reinvestment strategy, you will face the most difficult psychological challenge of all. We have been conditioned by movies and social media to believe that success should be exciting. We want the montage sequence where everything happens fast, but in the real world, wealth building is incredibly, painfully boring. This is the fourth silent habit, making peace with boredom. After the excitement of starting your journey wears off, you enter what I call the flat zone. You are automating your savings, you are reinvesting your dividends, and nothing exciting is happening. You are just waiting. This phase can last for years. It is the middle of the journey where the finish line is too far away to see and the starting line is too far back to remember. This is where people sabotage themselves. They get bored with their strategy, so they start tinkering. They switch funds, they try to time the market, or they chase a risky trend just to feel something. The wealthy know that boredom is not a sign that something is wrong, it is a sign that everything is right. If your investing strategy is exciting, you are probably gambling. Real growth is like watching paint dry or grass grow. It is silent, it is dull, and it is extremely effective. The habit you must cultivate is the ability to sit on your hands and do absolutely nothing, even when your brain is screaming for action. And while you are sitting there doing nothing, the world around you will occasionally go crazy. That brings us to the next habit. The stock market is a volatility machine. It goes up, but it also goes down, sometimes violently. When the market drops 20% or 30%, the noise in the media becomes deafening. Headlines will scream about crashes, recessions, and the end of the world. Your friends will panic. Your instincts will scream at you to sell everything and run to safety. The fifth silent habit is emotional regulation. You must build a fortress around your mind that keeps the fear out. The wealthy do not view a market drop as a disaster, they view it as a clearance sale. They understand that volatility is the price of admission for high returns. If you cannot handle the downturns, you do not deserve the upswings. Reacting emotionally to market news is the single fastest way to destroy wealth. It causes you to sell low out of fear and buy high out of greed. This habit is about detaching your feelings from your finances. You have to learn to look at a red portfolio screen and feel absolutely nothing. You have to trust the history of the market more than you trust your current anxiety. This silence, this ability to remain calm while others are panicking, is a superpower. It ensures that you stay in the game long enough to win, while others get scared out of their positions and lock in their losses. To maintain this level of calm, you need to fundamentally change how you view what you are buying. There is a fundamental difference in mindset between people who try to get rich and people who stay rich. The tryhards think like traders. They see a stock as a ticker symbol, a squiggly line on a chart that they are betting on. They are obsessed with the price today versus the price tomorrow. The sixth silent habit is thinking like an owner. When you buy a broad market index fund or a solid blue chip stock, you are not buying a lottery ticket. You are buying a piece of a real business. You are buying a slice of human ingenuity, production, and profit. Owners do not care if the price of their business fluctuates on a Tuesday afternoon. They care about the long-term viability of the company. When you shift your perspective from betting on lines to owning businesses, the silence comes naturally. You realize that you are partnered with the economy. You stop checking your account balance every day because you know that real businesses take time to grow, expand, and innovate. This mental shift creates a deep sense of security. You aren't gambling, you are accumulating assets. You are building a portfolio of ownership that will pay you for the rest of your life. This habit transforms investing from a stressful game into a lifelong accumulation of value. But even if you master the investing side, there is one final trap that can undo everything you have built. You can get everything else right. Start early, automate, reinvest, stay calm, and still end up broke if you fail this final habit. As you get older and progress in your career, you will likely make more money. The natural human tendency is to spend that new money. You get a raise, so you get a better car. You get a bonus, so you upgrade your house. This is called lifestyle creep, and it is the silent killer of wealth. The seventh habit is building a lifestyle shield. It is the conscious decision to keep your cost of living relatively flat even as your income grows. The gap between what you earn and what you spend is your wealth-building fuel. If you let your spending rise every time your income rises, you are closing that gap. You are running faster just to stay in the same place. The wealthy practice the art of looking poorer than they are. They don't upgrade their lifestyle immediately. They capture that new income and divert it into their investments before they get used to seeing it in their checking account. This doesn't mean you can never enjoy your money. It just means that you prioritize your freedom over your image. By defending the gap between your income and your expenses, you ensure that every raise accelerates your journey to financial independence rather than just adding more clutter to your life. These 7 habits aren't flashy. They won't get you 1 million views on TikTok, and they certainly won't make you rich by next weekend. But that is exactly the point. We are not here for the noise. We are here for the result. By respecting time, automating your discipline, reinvesting your wins, enduring the boring middle, controlling your emotions, thinking like an owner, and shielding your lifestyle, you are building something that cannot be taken away. You are building quiet, unshakable wealth. If you are ready to stop chasing and start building, I want you to verify that you are subscribed to the channel. We are building a community of real adults here who are done with the hype. And if you want a tool that helps you visualize this progress, something that helps you see the momentum even when it feels slow, join the early access waitlist of the Trip to Wealth Command Center linked in the description. We are building the tool to keep you focused on the signal, not the noise. Remember, the goal isn't to look rich. The goal is to be free. This video is for educational purposes only and does not constitute investment advice. It is important to conduct thorough research and consult with financial professionals before making any investment decisions. The value of investments can fluctuate, and past performance is not indicative of future results. Always assess your risk tolerance and investment goals before allocating your capital. If you found value today, I highly recommend watching my next video. Don't forget to like, share, and subscribe to our channel. Also, feel free to leave your comment below, especially if this video made you think differently. I appreciate your support more than you know. I'll see you in the next one, Money Magician.